So hello everyone. I want to take you through the process of purchasing and selling. And upon purchasing and selling, we have end-to-end process whereby once we purchase, we have to pay. So we look at the purchasing and selling, and payment. Once you purchase, of course, you have to do the payment. Then the rest of the process is you sell, and once you have sold, you have to do the receipting. You have to receipt. So these two processes are the basic ones in an organization, whereby they will help you to understand the processes of the basic processes of where a transaction begins in an organization and where it ends. Whether it's a transaction which is going outside the business, or it's a transaction which is coming inside. By going outside, I'm referring to selling. These are selling items. If it's, for example, your organization is dealing with the process of, or the business of selling things that you manufacture, or perhaps you procure as for resale. That is the process of selling and receipting. Then if you are purchasing an item or stock to be used in the organization, the process of purchasing and payment. So what happens is I'll take you through an example, and for a proper understanding and also capturing the process. For example, if we have a customer who requires 100 laptops, this customer will contact one of our department or your organization department, which is responsible on selling, and this department is sales department. Once this customer contact the sales department, they will say, they will contact them and tell them, you know what, we need these 100 laptops, and we would require them perhaps in a certain, or in a period, or a certain duration of period. Then once the sales department of your organization receives this information, the sales department in your organization will contact your inventory department. The inventory department is responsible of maintaining stock. They will maintain stock, and also they will do requisition, and of course these requisitions has to be approved. So these are the primary basic functions of an inventory department, of course, in your organization or any organization. And once the sales department receives a query or an intent by a customer to purchase, they will come and contact the department inventory. The department inventory department will confirm whether they have these 100 laptops, so that the sales can be able to sell to this customer. But in a case whereby, excuse me, whereby the inventory department doesn't have these 100 laptops, for example, let's say, for example, the first scenario is that already the inventory has 1,000 laptops. If they have 1,000 laptops, of course they will confirm to the sales department and tell them go ahead and do the sale, because already we have enough laptops. Even if they need more than 100 laptops, we can be able to, you can go ahead and sell. But in a situation whereby eventually confirms they only have 10 laptop in the store or on their store, they will have to raise a requisition. They will have to raise a requisition, and this requisition will be of 90 laptops. We will have a 100 requisition of 90 laptops. Let me put it here. At least to be able to do this sale of 100 to the customer. So the basic primary work that you are supposed to understand is that the inventory will maintain the stock, and also will do the requisition. So once they requisite, they can get they can do a requisition of more than 90, but they can still do of more, so that they can continue maintaining the stock. So once the inventory has done the requisition of 90 laptops, it communicates this information to a department we call purchasing. This is a department that works, its work involve purchasing new or procuring in the department of, or in an organization, sorry. So what happens is, once the requisition is done on inventory, the same requisition will have to be approved. Once it has been approved, this approved requisition will be communicated. The information it has, it will be communicated to the purchasing department. And what does purchasing department do? Purchasing department, it will raise RFQs. RFQs, in other words, will refer them to request for quotations. The meaning of RFQs. So these RFQs, of course, they have to be approved. Once they have been approved, they will be sent to supplier. And once the suppliers receive these RFQs, they will share the quotations. So what the purchasing department will do, will receive quotations. Once they have received the quotations, these quotations will have to be analyzed. So we usually refer to it as quote analysis. The quote analysis, this is for choosing which is the of course, once you have received several quotes with different terms, different amount of charges, the organization has to settle within or in a few which they can issue, or something we refer to as a purchase order. So before purchase order, here we have said they will choose the best quote. Once they have received the best, they have chosen the best quote, they will place an order. Sorry. Once they have received, well, they have placed an order, they will go ahead and the suppliers who has been placed an order with, they will supply goods and goods will be received. So they will be receipt, call it receipt. There will be receipt of goods. Receipts of goods in the organization, but this receipt of goods, it can, of course, it will be listed under the inventory department, but the functionality is under purchasing. So once the goods have been received, this is what we refer to, in other words, we usually create a document called GLN. GLN means goods receipt note. Okay, goods receipt note. So once the goods receipts goods has been received, this information of the goods that has been received will be communicated to another department we refer to as payable department. The payable department, what they will do is they will maintain the purchase invoice and do the payment of the goods that has been supplied in the organization. Okay. The same case, this information will be communicated to another department, which we refer to as cash department. The cash department usually does the maintain the bank accounts of an organization, and also they do bank statement reconciliation. Okay, those are the primary functions of the cash department. So what we are saying is a customer has requested for 100 laptops purchased. They have expressed the willingness to purchase 100 laptops, and they have communicated to sales department. Sales department check with the inventory department and find that they have only 10 laptops. So they tell the sales department, because we have 10 laptops and your customer requires 100 laptops, allow us to do a requisition so that we can add more laptops, which will be enough to sell to this customer. So this customer, the inventory department, once they have settled with the sales department that they can be able to place a requisition so that they can add more laptops, they send or they raise a requisition. A requisition is the willingness or an expression to acquire more goods on the organization or in the organization inventory, to restock. Once this has been raised, the requisition document has been raised, it will be approved. And once it has been approved, that information that is in this requisition, it will be shared with the purchasing department. The purchasing department, what they do after receiving this information, they raise a RFQs, that is request for quotations, asking suppliers this is a document that asks suppliers to quote or to give the prices of how they will sell their laptops to the organization. Once this has been done, of course, this document, the RFQs has to be approved. and sent to suppliers. Once suppliers receive them, they will send quotation to our organization. So we'll receive quotations. After receiving quotations, we'll do quote analysis. Quote analysis is a process of analyzing the quotes, all the quotes that has been received from the supplier, and settling with the best. That's where we, or the organization, will come and choose the best quote. Once the organization chooses the best quote, it places an order to that supplier who has the best quote. And of course, once the supplier receives the order, they will supply goods, and the goods will be received in the organization. Of course, we also have a feature or functionality of purchase return. Purchase returns. This is in a case whereby some goods are in default, status, or have been destroyed, perhaps on their transit to organization from the supplier. And now you have to return this good. So there is a functionality or process of returning these purchases, and we refer to it as purchase returns, which is done under the same purchasing department. So once the purchasing department has received the goods, it will communicate all this information to the payable department. Of course, the information that will be communicated, it is this information that has been received. And it will tell the payable departments that we have received these goods and they need to be paid. So what the payable department will do, it will create an invoice or a purchase invoice, and based on the terms of payment, it will calculate the due dates when the payment is supposed to be done, and it will definitely do the payments. Once it is doing this process, of course, it has to communicate again with the department of cash department and tell them we have done this payment through this for this invoice, and you need to maintain or to do the bank account reconciliation. When you talk about bank account reconciliation, you might find like maybe some checks has been written. Perhaps say you have received, you were doing 5 or maybe 8 invoices, and due to the nature of transactions, maybe from the suppliers whom you have issued these 8 invoices to, not invoices, sorry, the checks, they are supposed to be checks. You have issued 8 checks, and these checks, needs to be presented to the banks, to suppliers' banks, so that they can get money cleared from our bank account to supplier bank. But you find like at the end of a certain period, maybe at the end of the month, only 5 has been issued. 5 checks has been presented. So for you to understand where these other 3 are remaining, you have to do something we call bank reconciliation. This will tell you that in our books, we recorded that we paid 8 checks and issued. So we have already booked that one in our system. But unfortunately, from the bank statement, this is our books and bank statement. Only 5 checks have been presented. Only through bank reconciliation, you can be able to tell why there is this difference. So that is very, very much important. After that, all this information has to be communicated or have to flow to a department usually we call general or common department. So this is the information flow which will flow from perhaps let's say from purchasing. Then from purchasing we have information from inventory. We have information also from payables department, and of course we'll have information from cash department. And then one more thing, in a situation whereby you are purchasing or you have received an invoice which has details of not an inventory item. That is, if it's not an inventory item, it's an item that you are, it's not an inventory item and it's not an expense item. So probably is an asset item, okay? So what we usually have, we have a asset department. An asset department, whereby an asset department, the information once has been received under the payable department, this information will have to be communicated to asset department. Asset department, whereby under asset department we maintain fixed asset, and also we do calculate depreciation. So those are the main things you are supposed to note, that if an item is not an expense item and it's not an inventory item, it will be a fixed or an asset item. That time information has to be shared from payable and to be communicated to asset department, telling that the asset department, they need to maintain that information as an asset that has been purchased in the organization. So again, all this information also has to flow to common department at the end of the time. So under common department, what we do, we produce financial reports. We maintain financial reports. So this process, the main or the most primary information you are supposed to note with this process is that we start at requisition. This is where we begin our transaction, and we end with payment. We end with payment. Okay. So with that, we usually understand it or take it as the process of purchasing and payment. So we start the purchasing process at requisition and end at payment. Until we initiate a requisition, there's no way we can be in a position to pay it, because it will not be originating from anywhere. So with that, I have a flow diagram of how this process can be viewed.
And from this fraud diagram, you can be able to tell, like, from inventory department, of course, we are doing the primary work we do here is stock maintenance, and we do requisition. It's the same thing that we have looked prior, and also the approvals has to be done. Then with this, the stock maintenance and requisition and approval, Oracle has an application that does that work. And instead of now calling it inventory department, we usually call it Oracle inventory. Usually call it Oracle inventory, and in short, we call it INV. Okay. Call it Oracle inventory INV. So you should note that, because these are all what we'll be learning about, how now this stock is maintained, requisition is done, and approval. All this is what we'll be looking at deep when we get into the application. Apart from that, the next thing, or the next application or stage, it's about purchasing department. And the purchasing department, we have said, or we have seen that we usually raise RFQs. After raising RFQs, of course, they have to be approved. Once they have been approved, they will be shared to the suppliers, and once the suppliers have received them, we'll get something we call quotation. Suppliers will share with us several quotations. Then we'll do quote analysis. After doing quote analysis, we'll choose the best quote. After choosing the best quote, we'll place purchasing order, or we call it purchase order. Once we have placed the purchase order, the supplier will, of course, there will be approval. Let me also add the purchase order. Approval will have to be done. Once it has been approved, the next stage will be the supplier will receive this purchase order, telling them you're supposed to supply us with these certain goods. And once these goods have been, once the supplier receives this purchase order, they will supply goods in our organization or in the organization. And once they bring or they supply the goods has to be received. Once the goods have been received, we usually call it good. We usually produce a document called GRN. GRN, it stands for goods receipt note. This is a document saying that we have received the goods in our organization from a certain supplier. If goods might be in bad condition, we might do purchase return. Okay, so through these processes, or these practice of these stages and practices, Oracle has an application which we refer to as Oracle purchasing, abbreviated as PO. So we have PO in the form of transaction, which is the document. It's also referred to as PO. Then the same when it comes to from the angle of an application, Oracle purchasing application is also referred to as PO. Note the difference. There's a PO when referring to the transaction document, and also there is PO when referring to Oracle purchasing as an application. So after now having raised and RFQs, got the quotations, do the quote analysis, settle on the best quote, place an order, and receive goods. If in case they need to be returned, you do purchase return. Assuming the goods are not to be returned, the information will be shared with the next department, which is payables department. And what the payables department will do excuse me, will maintain purchase invoice. Once they have maintained the purchase invoice, they'll also do the payment. And if in the case there is asset invoice, they will share that information with asset department. So under the payables department, the application that Oracle has here, it's known as Oracle Accounts Payables, and abbreviated acronym is AP. AP, Oracle Accounts Payable. So basically, the primary task of Oracle Accounts Payable is to maintain the purchase invoice and they do the payment, and also share the asset invoice details to the asset management. Of course, we have also there an application for asset department. Under asset department, we have an application called Oracle Fixed Asset, abbreviated as FA. Okay. Then, once the payment has been done, of course, the information has to be shared. Oracle Accounts Payable Department, rather application, has to share that information with Cash Department. And Cash Department, what they usually do is maintain bank accounts. These are bank accounts of an organization, and do bank statement reconciliation. An organization, through Oracle, the application that maintains that is called Oracle Cash Management. Abbreviated as CM or CE. The reason why we have CM or CE, let me explain, is because we have an application by Oracle still called cost management. So To avoid confusion, Oracle directed that you can refer to cash management as CE. CE stands for cash entries. Please note that carefully. Then, after that, all this information has to go to the general or common department. And a common department we usually maintain or produce financial reports. Under financial reports, the application that we have under the general or common department and through Oracle, it's referred to as Oracle General Ledger. In short, we refer to it as GL. So this is how the information flows. So here we'll have maintain fixed asset. For maintaining fixed asset, we have to do calculate depreciation. Under the Oracle fixed asset application, we maintain fixed asset and we do calculation of depreciation. So basically, these are the this is the workflow, or rather the flow diagram of how the process of procuring and doing the payment of that procurement goes. So what we usually refer to this process is P2P. It is P2P. P2P stands for Procure. First P stands for Procure, 2 stands for TO, and the second P stands for Pay. So P2P means Procure to Pay. That is, if you happen to be asked how the process of Procure to or P2P goes, you're supposed to understand that it starts with, of course, in the inventory, whereby under inventory, we usually maintain a stock, and also we can raise the requisition, and those requisitions get approved. Once the requisition get approved, the information will flow to Oracle purchasing application or department, and from there, the Oracle purchasing will raise RFQs. These RFQs will get approved. RFQs, remember, stands for request for quotations. Then, once they have been approved, they will be shared with suppliers. Several different suppliers will share quotations, giving details of the how they will sell the item they have been requested in the request for quotations document. And these quotes will come and get analyzed. Once they have been analyzed, the solution is, or the end solution after analyzing is settling with the best quote, which has the best terms, which has got the attracting terms that can make the organization to purchase from them. Then after that, after settling on the best one, they will raise a purchase order, and this purchase order will have to be approved. Once it has been approved, it will be shared with the supplier. The supplier, once they receive the PO or the purchase order, they will send the goods to the organization. The goods will be received. Once they have been received, these goods will have information on how many are they, that is the quantity, their nature, the amount, and all this information will be shared with Oracle accounts payables. if, for example, there's no case of purchase returns. Once these goods have been, or this information that has been received through the goods receipt note document, once they have been, once the information has been received, it will be shared with the Oracle Accounts Department, whereby the Oracle Accounts Department will maintain the purchase invoice, and this invoice will get also be paid under the same Oracle Accounts Payable. So we have two primary functions under Oracle Accounts Payables, which is payment and maintaining the purchase invoice and doing the payment. You can't do payment without the invoice. You have to have the invoice first, and this is a purchase invoice or supplier invoice. And once now you have the invoice, that's only when you can be able to pay. The other thing, or the other function, is that once the information the Oracle Accounts Payable has received is relating to an asset for an organization, that is, it's not an expense invoice, it's not an inventory invoice. An inventory invoice perhaps is for things that maybe you are purchasing to come and restock or resell. And then an expense invoice can be for an item, like for maybe a service that an organization has procured. So this information doesn't need to be shared with the Oracle Fixed Asset. It's only when they have received an invoice with an asset details, telling them that this has been procured for the purpose of use in their organization. For example, it could be a vehicle, it could be maybe a parcel of land, it could be a new desktop for a certain office, and it could be furnitures. All these will be maintained. The Oracle Accounts Payable will have to share the information to Oracle Fixed Asset Department, whereby the Oracle Fixed Asset Department will maintain that fixed asset information, and as time goes by, it will continue doing calculation for depreciation. Then after that, the payment, once has been done for these invoices, it will be communicated with to the Oracle Cash Management Department, and this department, through Oracle Cash Management application, it will maintain bank accounts for the organization. We refer to them internal banks. Internal bank accounts refer to as bank accounts for the organization. We have also external bank accounts for suppliers, but that is information that you will come to understand in future. For that case, the primary goal for Oracle Cash Management is to maintain internal bank accounts and do bank statement reconciliation. All this information has to flow from each and every department. The reason why I have two arrows here, two-sided arrow directing both sides, is because there is an information you can get under the cash management, and the same information you can get under the Oracle General Ledger. The same case applies to Oracle Fixed Asset and Oracle Accounts Payable. So basically, these are the primary, information that you're supposed to understand flowing from for the process of procure to pay. The primary goal or the primary accounts that you'll be dealing with is these two when it comes to procuring or to payment, because there must be an order that which will be communicating to the Department of Accounts Payable, telling them that this is what has been ordered and has been delivered, and through delivery this is the information. But in all, these are supply chain department or applications And from here, on the other side, these are financial applications. I hope it's clear. So in our learning for Oracle financial, skills, we'll be majoring more on Oracle cash management, Oracle accounts payable, Oracle fixed asset, and Oracle general ledger. But because of the purpose on information and also to understand where is this information coming or flowing from, we'll have to look at the basic setup and preparation of these documents in Oracle inventory and Oracle purchasing. Okay, so that is all about P2P procure to pay process. And the next stage I would like us to look at is about the process of selling and receipting. So what happens? We have a sales department, and under sales department, the sales department will receive something we call sales order or customer order. From a customer, they will receive an order. And what they will do, they will record the sales order. And once they have recorded the sales order, they will contact the inventory department, INV. Once they contact the inventory department, the inventory department will confirm whether they have items or perhaps the goods that the customer is willing to buy. And once the inventory has confirmed that they have the goods, the sales department will go ahead and do something we call book the sales order. There's a difference between recording a sales order and booking a sales order. Recording is when a sales person has just received the information from a customer that they are willing to purchase. But this information is yet to hit in the books or in the system of an organization, whereby it can be tracked or even be assigned to the process of selling. So once the record sales has been done, the next stage is to do book sales order, is to book the sales order in the system. And once the sales order has been booked, the inventory department has to be in constant communication with the sales department. And the reason is because there are several functions happens under the inventory department, and has to be communicated on and on, or simultaneously to the sales department. This is inventory department. So so what happens? So assume this is the inventory department, and under this inventory department, we have some other sub-departments inside it. For example, we can have, that is one sub-department, and we can have another one. or rather let me use the same as this one. So under this sub inventory, we call it, we assume, like, for example, it is maintaining laptops, and under the other one, it is maintaining desktops. So what usually happens under these two sub inventory departments, it's like, call them the stores, or maybe, yeah, you can refer them the stores under inventory department, or under the main inventory. What usually happens is, once the sales order has been booked in the system, the inventory department will do a process of now removing this, the amount of order that has been ordered, or the item that has been ordered from the sales order. The information, because it will be communicated to the inventory department, the inventory department will come to, perhaps, let's say, for example, the sales order has maybe 20 laptops and 20 desktop. What the inventory department will do, it will come and pick the 20 laptops and the 20 desktop, and drop them to this area. Drop them to this area. This area, we refer to it as we'll do it the other way around. This area, we refer to it as staging area. So the point is, there is a process, and that process is what I want you to understand. When the inventory department receives the information of an order to process 20 laptops and 20 desktop, once they receive that order, they will prepare those 20 laptop and 20 desktop and bring them to this staging area. So this staging, the process of doing this process of moving from sub-inventory to staging area, we usually call it pick release. It's a process we refer to as pick release. This is confirming that the goods have been moved now from the inventories or sub-inventories and have been dropped in the staging area. Staging area, take it like an area where the preparation and loading into the vehicle happens. So until they have done all this, they cannot go to any other stage apart from a pick release. So once they take goods from the sub-inventories to the staging area, we refer to this as pick release. Okay. Of course, this is inventory maintenance. Then these goods have to be now loaded to the vehicle and to be sent to a customer. Say this is a customer. So the goods now have to leave from the staging area to to the customer. Okay. The process of moving from the customer, from the staging area to the customer, in the system, the sales department, or maybe the inventory department, and through another sub inventory department by the name shipping department, we can this one goes by the nature of an organization. The process is referred to as ship confirm. So ship confirm is when the goods leave the organization and now they are heading to the customer's premise. In this process helps in terms of communicating with the customer. The customer might contact the sales department and ask them, we booked so and so goods, and now it seems like maybe we are not sure where the process has reached. Are we gonna receive them in what time? And maybe you can advise. So through these processes, the sales department can be able to tell the customer that your goods are on the way because already ship confirm has been done. And of course, once that has been done, if the customer is not pleased with the goods and maybe they need to return some of the goods, we usually have a feature or a process called sales returns. Okay, this is when the goods have been brought back to the organization. So after all, if there's no any good that is needed to be returned, or perhaps for the goods that are okay, the sales department, once it has done ship confirm, it communicates with the receivable department. And the receivable department will maintain the sales invoice. And also, once the customer has paid this sales invoice, the receivable department also maintains something we call receipt. They record the receipts of the sale in the organization, or from the customer to the organization. So again, all this information has to be communicated to cash management department. And under cash management department, we maintain bank accounts. Of course, these are internal bank accounts. That's where money from the customer will meet. And also, we'll do bank account, bank statement reconciliation. Once bank statement reconciliation, this is checking on that. There's a customer who is claiming they have paid, and maybe you are not sure the amount that you have received from all the customers. For you to understand surely which amounts, which payments from customer has hit your bank accounts, you have to do bank reconciliation. And of course, after all that, all this information has to flow to common or general department, whereby under this department, we usually produce financial reports. So the flow will come from, of course, from the sales department, also from inventory, also from the receivable department, and again from the cash department. cash management department. So that's how the information will flow. And at the end of the day, we also have a flow diagram for the same, whereby we have the inventory department. Of course, this one we had seen from our previous P2P cycle or process, whereby we have Oracle inventory, which we refer to as INV. So under INV, we maintain stock, and also we do requisition, and of course approval. And then the next process, this is where now the inventory department will confirm whether they have stock or not. If they don't have, they requisite so that they can sell. So under the sales department, we have an application by Oracle called Oracle Order Management, OM. Okay. Under this application, we usually record sales order. We also book sales order. We do pick release. We do ship confirm. And also we do sales, maintain sales return. Okay. So this is the application that Oracle uses, Oracle Order Management. Then of course, this information has to flow to, once the ship confirm has been done, they have to share information with receivable department, which it's an Oracle, it has an application by the name Oracle Accounts Receivables. Oracle Accounts Receivables, AR. Okay. Oracle Accounts Receivables. And our Oracle Accounts Receivables, we've said we maintain sales invoices, and also we record receipts. So these are the primary functions of this application. Okay. Then of course we have the information of receipts has to be communicated with the cash department, whereby under cash department we've agreed, we've looked at this before, which is Oracle Cash Management. Oracle Cash Management, abbreviated as CM or CE. Cash entry. Remember that is cash entry. So here we do bank accounts maintenance, primary goal or the primary function, and also we do bank statement reconciliation, bank recon. Then of course all this information has to flow from Oracle accounts payable, order management, Oracle inventory, Oracle cash management has to flow all the way to the common or general department, which we refer to as Oracle has an application called Oracle General Ledger. GL. The GL, the primary goal is to produce financial reports. Producing financial reports. So that's the primary goal, and that's the process of selling, whereby we have the stock maintained under Oracle inventory. Once the stock, if the stock that the customer requires is enough, the communication, the Oracle inventory department or application will be used to communicate to Oracle order management, department through Oracle order management application, whereby they will record their function or primary function is to record the sales order. Then once they have recorded the sales order, they will go ahead and book the sales order. Once they have booked the sales order and they communicate to the inventory department, the inventory department will communicate back once they have done, removed the goods from the sub-inventory to staging area. And once they have communicated, they have done that, this, the sales department through Oracle order management. The sales department will do peak release in in order management, and also once they have peak released, the next step is the goods should be loaded into the vehicle, and now they will be leaving the organization premise towards heading to customers' premise. That procedure we call it ship confirm. Once the ship confirm has been done, it means now the sale has been completed, and now what the business should expect is the payment of the goods. So it will, the sales department through Oracle order management ship confirm, it will communicate to Oracle accounts receivables, telling them that these goods have been sold and we expect this money, so you should book or you should raise a sales invoice in your department through Oracle accounts receivable, and you should expect also, once you have raised the invoice and send it to the customer will do the payment and you will do the receipts of that payment. Of course, after that, after the receipt, of course, money will be received on the organization bank account, and through that, the cash management department will do bank accounts maintenance, so that money can hit the bank accounts, and also it will do bank reconciliation to confirm which payments has been received and which one has not been received. Through that, all this information will flow to the Oracle General Ledger application, whereby this department will use this application to produce financial reports. That's about the process of selling. We usually refer to it as O2C and O2C stands for order to cash. Order is this order that is being placed by the customer. There's no way we can sell without this order. Then cash is the receipt. So the process primarily has booking of the sales order, and it has to end with receipting of the payment. So that's why we have O2C, which is stand for order to cash. With that, I've gone ahead and brought the two processes together, and this is how they look like. From here, we have the inventory. The inventory is serving both sides, whereby we have this is the process of purchasing on the left side, and we have the process of selling on the right side. If you can see, if you can come and cut it like that, you can be able to see we have the inventory, whereby stock is maintained and requisition are done. Then we have order management under sales department, whereby recording of sales order is done. Then booking of sales order is also done. Then there is pick release, there is ship confirm. Then if in any case there is sales returns, they will also be booked or recorded under order management. Once that has been done, there will be raising or confirming or communicating with account receivable department, whereby the account receivable department will raise or will book or will create an invoice of a sales invoice or a customer invoice under accounts receivable, Oracle accounts receivable applications. Once the invoice has been received, it will be sent to the customer, and once the customer receives the invoice, they are expected to pay. And through payment, we usually confirm the payment by receipting that payment, and that information will be also be communicated with the cash management department for the purpose of bank reconciliation maintenance. And also the information will also flow to the general ledger module, or rather application for financial reports producing. That is primary for order to cash, O2C. That is primarily for order to see or order to cash. Then on the other side, you can see we have the procure to pay, that is P2P, and can give it such color. So we have the inventory, whereby the inventory also, they maintain stock requisition, and under the purchasing department, which we refer to as PO, we usually raise RFQs, that is request for quotations. We receive the quotes, we do quotes analysis, and of course we choose the best quote. Then after that we place the order, that is PO's purchase order, and once the supplier receives the purchase order, they will supply goods in the organization. Once the organizations receive the goods, they will produce a document, or they will use a feature in purchasing application, which we refer to as GRN, good receipt note. And if in case there is a situation or a scenario whereby goods needs to be returned, they will maintain the purchase returns. Then from there, the information that of the goods has been supplied and received will be communicated to the purchasing or payables application, that is accounts payable, Oracle accounts payable application or department. And from that department, they will maintain, or they will create a purchase invoice or supplier invoice. And through this supplier invoice, they will do payment against that purchase invoice or supplier invoice. Same payment has to be communicated to cash management for bank reconciliation. And the same case, if the invoice relates to a fixed asset, item, it has to be communicated with the fixed asset application or department so that they can maintain that as an asset, and also they can calculate the asset depreciation. Then the information has to be communicated, all this information has to be communicated to the general ledger module or application. Module is the technically we refer to it as application. We refer to the application as a module in a technical manner. So the information has to flow all the way to general ledger. So this is for P2P. I hope it's clear. I hope it has opened your eyes. And in case you need to have more clarity, have more questions, you can reach out. Yeah, we continue learning and enriching each other. So on the top we have call it SCM, or rather supply chain management. And on the bottom, we have financials. So what we'll be learning, it's all about AP, cash management, account receivable, fixed asset, and general ledger. This is all about financials. And if you would like to learn more about, okay, we'll have to go through some of the required basic for the supply chain so that you can see how they flow to financials. But basically, what we major in is financials. So guys, let's continue learning. Let's keep on learning, and I tend to believe you will enjoy.